Good morning and welcome to the Leadership Insurance Podcast. I'm your host, Alex Bond, and I'm very lucky today to be joined by Aviad, who is president of First Connect, which is a Hippo company. Is that the best way to introduce it?
Yeah, that's a good headline. First Connect is a fully owned subsidiary under Hippo, and it's a digital platform targeting to empower and to provide value to independent agents all across the country by providing them access to top carriers all across the nation, as well as technology solutions for helping them to manage their agency efficiently.
There we go. There's a well-practiced one-line pitch that we just had. Love that. Look, thank you for joining me. It's really kind of you to give your time up. I know you're a really busy guy, particularly because of this new subsidiary that you're running, the First Connect. Not necessarily that new, but I know there's a certain amount of impetus at the moment, so that's really exciting. But I wanted to take it back because I think it's really good to give some context as well, because Hippo, very well known, very successful insurtech, been probably an insurtech before an insurtech was an insurtech at the start. And you've been with them since day one. You're part of the founding early team, certainly. So I think it'd be great to kind of hear some of that journey before we kind of dive into the kind of nuts and bolts of what we're doing today.
Yeah, happy to. As you mentioned, I was lucky enough to join Hippo very early on in January 2016, right after the seed round as the first employee of the company. And I joined as the head of product and later became the chief product officer of Hippo. And product in the sense of technology and customer experience, not the insurance product, and was pretty much busy with building the customer experience, the agent experience, the distribution channels, and everything throughout those years until about a year and a half ago, I transitioned into managing First Connect under Hippo.
Thank you. And I think that product experience is something I want to dive into before we get to the kind of First Connect piece in detail, because I think that's product, customer experience, customer journeys is really where the battleground, certainly, obviously it still is, but always kind of was the emphasis of kind of some of this early stage, Hippo obviously, but Lemonade and other kind of big direct consumer brands, or even those using distribution channels like brokerage. And I think it's really fascinating to see how much product has had a part to play in that, because that's really the kind of forefront, that battleground, and you coming from that, I think, is an interesting journey to discuss. Like, when you look at Hippo, what do you think that's kind of biggest improvements of the kind of insurance customer experience has been in your time there?
Yeah, a few things. I would start with the most, I would say, fundamental value proposition that we went live with in the early days, which is the ability to get a quote in 60 seconds and to complete the bind online in 5 minutes. Back in the day, and I'm just talking about 2015, 16, 17, it was very uncommon to be able to get a quote online and then to complete the binding, the purchase of the policy online. Even though e-commerce was already flourishing, the common experience, at least in the US, has been that you get maybe a quote online, but then you are being asked to call an agent over the phone in order to complete the purchase, which is not exactly what customers are delighted by. So the ability to create a streamlined quote by using third-party data and some other techniques in order to increase the accuracy and the speed to quote and then completing the bind was kind of one of our initial value proposition back in the day, and it's still something that is playing a difference for us. But it goes, of course, beyond that. One thing that we had in our philosophy from the very early days is to meet customers where they are. So we actually use technology and product thinking in order to build an omni-channel strategy for our distribution. For example, we have a very successful partnership with several builders in the US. So when you're in the process of buying your new home, in many cases, you also get the mortgage, the financing from the same point of sale, and you're being offered a customized insurance policy on the spot that is based on the characteristic of the house you're in the process of buying, financing as a new build. And that's something that we build specifically to allow customers to benefit from the ease of use of Hippo in the process of buying a home. Another example of that is that we also expanded the Hippo product, even though it started as a direct-to-consumer, we also expanded it to be a good fit for agents. So we created a different flavor of the Hippo systems that was initially direct to consumer. We expanded it to be also used by agents and to get agents to benefit from a sleek consumer grade experience. Because as a matter of fact, shameless plug also, for my current role at First Connect, many people are still calling independent agents, and the channel of independent agents is nothing but growing strong. So we made sure that even when you are a customer who doesn't want to go online to get a quote in 5 minutes and buy by himself for whatever reason, you can call your agent, and then we are there. Like we are also as Hippo, we are there, and we are serving the agent at the same way. And at the same time, we also the technology ability that we had and the fast pace that we are operating in allowed us also to do a very rapid geographic expansion. We basically, in the few years that Hippo has been around, we expanded into more than 40 states and reaching to about 94% of the US population. And keep in mind that it's a state-by-state regulated industry. So it's not a trivial undertaking to be accomplished, at least not in such amount of time. And it's not only the launch in a new state, you also need to keep the product up to date and to refresh it with the latest regulation and pricing and so on. So it's a major undertaking that I can't imagine doing it successfully without the support or without the enablement of a sophisticated technology platform. And I would just, to complete the kind of the chronicle journey, I would just say that we also launched the Hippo Home Health Score, which is again based on first and third party data, allowing customers to benefit from personalized maintenance checklists in order to increase their or to make them more, I would say, savvy homeowners that can take better care of their homes more easily, and so which of course also benefits the insurance side. And most recently, we actually made this app available not only to Hippo customers, but pretty much to any homeowners in the US. So as you can see, technology was both a driving force and an enabling factor in our journey from the early days until stuff that we actually released in the past few months.
It's the theme that cuts through that though, and I think this is where kind of being someone that comes from product from a SaaS perspective, because you were at LinkedIn before, and is that correct?
Yeah, I didn't hail from insurance. Yeah, I came to Hippo after I was at LinkedIn doing product management and some other similar stuff before. Yeah.
Yeah, I think someone that comes from that side of the house, there's a baked in customer centricity with that. You're always thinking about customer, and you're thinking about individuals using systems and how do we get more engagement, and particularly something like LinkedIn. LinkedIn is all about engagement. How can we continue to get people to engage with the platform? And that's something that insurance has always struggled with. And I was thinking as you were saying this, I was like, insurance knows. Because I was going to say, I was going to ask you a question of, do you think insurance knows enough about its customers? And I think it did, but it knew enough about its customers in respect of what they represented as a risk. I don't know if it knew enough about its customers in terms of what they needed and wanted. Do you think that's a fair kind of assumption? And I'm talking about at the early stages, that it was less about what people wanted, what they represented as a risk.
I think it's a very fair assumption. When you look at the wealth of data that insurance companies have about pricing, losses, underwriting consideration, it's incredible, right? I mean, those companies, especially the ones that have been around for decades, they have, quite a meaningful amount of data that pertains exactly to the points you mentioned. What we realized in the early days that those companies in many cases lack is customer centricity. It's not about how to use the data in order to benefit the customer or to delight the customer. It's not necessarily about how to use the data and technology in order to create a better customer or partner experience. In most cases, and there are exceptions, of course, but in most cases, it's about, okay, how to use the data in order to get like more accurate pricing or restrictions or underwriting, which is important. I'm not saying it's not. It's a very fundamental part of the business, and there is no doubt. But you should, especially in today's world when customers' expectations have evolved, you should probably use the data more holistically in order to also benefit customers and partners by leveraging data, creating APIs, and make decisions faster in a more accurate way. And I think this is a kind of the gap that we identified in the early days in how we could be different as a Hippo and provide better customer experience that stands out.
And it's where the opportunities are. I was having a conversation this morning with a person that's a sort of as a DE&I expert in the insurance industry, and we were talking about hiring and we were talking about talent, and actually the conversation evolved into being a conversation about if we don't know our customers well enough and different customers' cultures and for example kind of backgrounds, we're missing opportunities to sell them insurance. And one of the examples that they kind of used was that in different cultures, people think more in a family orientated way or community oriented way, as opposed to, you know, UK and US is quite individualistic. So they were saying there's no point trying to sell to these kind of family orientated cultures a individual life insurance policy or an individual kind of health insurance policy, because they want to buy things in. So they were saying it's not just as simple as saying it's not serving the customers you've got. It's also kind of you're not bringing in customers that you could have. But anyway, I'm going off topic, which I tend to do. I apologize. But I really wanted to talk to you about the kind of your career path, because we're always fascinated about talent. That's what we do. We're a research business in the insurtech space. I wanted to know, you've been in the insurtech space for a long time now. How do you think the perception of insurance as an employment destination for, you know, product or tech engineering talent has like evolved over that time? Because there's definitely been a shift.
Yeah, I think it's a great question, and it did evolve. Let me start, and it touches the issue, the question we just discussed. Many insurance companies have not been very focused on product thinking or even technology. And even when you look at the terminology, in many cases, more traditional companies refer to their technology teams as IT, which is fine, but it just tells you a lot. Like, it's not about innovation or product thinking. It's more about delivering a service to the business unit and to the actuarial units and to the claim units and so on, which again, nothing wrong with that. It's very, very important. It's a crucial part of the business, but it's not the full picture. And you can't really drive innovation when you think about the world of technology in this way. I think it kind of limits you. What I believe has happened over the past few years, and it's still obviously work in progress, and we are not at the end game just yet, but I do believe that companies such as Hippo, and not only Hippo, by the way, there are some other great players in the insurtech industry and community that are also are a force of change. And I think those companies, including Hippo and our other peers, are slowly changing the paradigm, demonstrating that you could actually build both a strong insurance muscle as well as a technology and product, which is customer-centric muscle. And you can show, by doing that right, you can show the role of technology and the value that it adds to the industry. Like, you could still have rapid iterations over your rate plans and underwriting policies and state expansion, which is very, very closely tied to the insurance side of the world. You can do that while at the same time improving the online buying experience, quoting and buying experience, creating a suite of APIs to be used by your partners, delighting agents that are selling your product. And I think what we've been able to demonstrate is that it could be done, and it's not materially different at the end of the day for many other industries. I mean, let's get out of the insurance conversation for a second. When you look at other industry, and I think fintech, for example, is a great case in point, because it's a complicated industry, regulated, been pretty much heavy on the more traditional players. But when you look at the curse of fintech over the last, 15, 20 years or so, you've seen quite a material shift. I mean, the curse of this ship of the industry as a whole kind of changed. I mean, you've seen the emergence of, now they are not early players anymore, but PayPal is a relatively newcomer. Stripe on the enterprise side, it's a huge player, but again, it's relatively new. Venmo, SoFi, and many more others that you could call out. They actually changed the way customer experience works in the fintech world, both on the consumer side, but also on the enterprise side and the B2B side. And right now, we almost take it for given that you can, send payments instantaneously online via Venmo or PayPal or whatever, and buy stuff online or implement payment into your website if you're a small business owner. We take it for granted. But all of this stuff was not around 15, 20 years ago, and it was introduced to the world by the integration of product thinking, customer experience, API, infrastructure and ecosystem that were built by those companies over the past 15, 20 years. So I believe insurance is going through a very similar life cycle, only that it started a bit, I think, later for several reasons. But I think that's, in essence, the promise of InsurTech.
Yes.
I think that's kind of the sum of it at the end of the day.
I was at a talk in Qatar week before last, and we were asked about this kind of like talent conundrum, and I just said what we need to focus on is the exciting stuff that's happening in the innovation of the space. If you just say, if you try and hire engineering talent or product talent into insurance, and you just say, do you want to come work for an insurance player? They're probably going to say no, because they've got it. It's got a bad reputation. Not a bad reputation, but it's not seen as exciting. Whereas if you talk about the individual innovation that you're doing, whether that be kind of working with ML or working with kind of like advanced technologies, that in itself can be exciting. So I always kind of advise people to take it down to a project layer and go, okay, this is the project, the framework within it. Because if, for example, fintech doesn't actually have a lot of that kind of negative reputation and PR, but you're talking about, making payments more exciting. That's not exciting. It's certainly not as exciting as insurance, but we've managed to do that. So I think it's interesting. It's a sort of reputational piece.
But Alex, let me comment on that for a second. I know we're going a bit off script, but this is a great point, and I cannot count the number of times that I was interviewing candidates, for different jobs at Hippo, and I got this kind of reaction, because this is exactly what people have in mind. And usually my reply, and first of all, it's kind of a self-selection in a way, and it's fine. But if you look at it a bit differently, it's not only about how sexy an industry seems like from the outside. In many cases, the sexy industries are the ones that are already saturated. There's been a lot of innovation and very little value to be built further. In some cases, the unsexy industries are, the ones that are ripe for disruption, innovation, and there is a great business to be had. So just, to give you an example, if I would have told you that you could join like essentially a taxi company in the late 2000s, the first decade of the 2000s. Sounds pretty boring and not sexy, right? Yes. But that became Uber, which is pretty huge, I would say, right? A lot of value creation. You could join like book retail company in the 90s. Sounds very boring and not sexy. It became Amazon. Same goes to hospitality. Who really wants, what kind of engineers want to work for a hotel chain? But that became Airbnb. So in many cases, the initial perception of how sexy an industry is very, very misleading. And it gets you to lose the bigger side or the bigger picture about the value of the industry and the potential for innovation, value creation, and benefiting, customers' life. I mean, think about those companies like Amazon, Uber, and Airbnb. They play a huge role in my life, and I'm sure that in many of your listeners' life. But the initial pitch of the industry, you could also position it as a very unsexy, very unattractive pitch to begin with. It played out a bit differently, though.
Yes, no, that's a really important point. And we've still got the journey to go, so that's what makes it exciting. Right, we need to bring it to the first connect, because I think this is why we connected in the first place when we were in InsurTech New York. So it was. I think it's important to explain that it was an acquisition, wasn't it? It wasn't. It wouldn't involve. What was the rationale? What's the opportunity? And I suppose why go down this pathway, right, rather than just doubling down on the existing Hippo success. I think
it's a great question and a fair one. So first of all, First Connect, as we mentioned before, is a platform, digital platform that is being used by thousands of independent agents across the US in pretty much almost every state. And it's allowing those agents to get access to a very broad, wide portfolio of insurance carriers and MGAs, both traditional ones as well as more of the insurtechs part of the spectrum. Now, to go back down memory lane, when Hippo was still going very, very fast in the very early days of the company, we were launching like new state every week, and so we were like in the early days of like building the foundation of the business and going super fast. First Connect, which was not back then owned by Hippo, became a very major, fast-growing and large distribution channel for Hippo. So the decision was, in order to protect this channel, the decision was made at the end of 2020 to acquire it and to make it part of the Hippo family of, the Hippo organization. Fast forward for 2021, when it was post-acquisition. To be completely honest, there was not a significant investment by Hippo at First Connect for the reason you mentioned. I mean, we were prepping for an IPO, we had to scale the business. So the focus area was probably in other places. And I was also the chief product officer back then, working on building everything that was needed in order to get us to the next level. Nevertheless, what we saw and what I noticed is that First Connect, despite very limited investment in the day, was growing very rapidly. So that for me was a very interesting indication for a strong product market fit, that if you have a business that is growing rapidly without a lot of investment, there's probably something that is done right. Yeah. Not to go into too many details, but I double clicked on that and I saw some more specific data points that convinced me even further in this thesis. And then what I started to think about, and it was, unfortunately, I had a lot of free time back then. It was during one of the COVID waves, so I had to cancel some, family trips, family vacations. So I had a lot of free time to dive into the business and into the industry. And what I found out that is the potential over there, it could be way more than just a meaningful Hippo distribution channel, which is important by itself, but it could be so much more. So what we've done over the past year and a half since I started pretty much in January 2022, we put a lot of effort into both the business development side, and we pretty much increased the number of carriers and MGAs or insurers that we offer to our agents to be over 70, pretty much doubled, even more than doubled since I joined, which especially in this market, I think it's a pretty big deal. And we are taking a lot of pride in offering this optionality to our agents. We've been growing the agent base, obviously, by a lot. And we've been working very hard on adding different layers of technology and ease of use in order to benefit both the agents that are using the platform as well as the carriers that are getting their sales to the platform. And basically, the overarching theme here is how to level the playing field between small to medium, I would say, independent agencies all across the country that usually don't have access to meaningful technology resources. So basically, how to level the playing field between those agencies and the larger direct-to-consumer agencies that do have access to technology and are competing with those businesses. And by the way, it's a huge part of the industry. Like independent agents in the US are driving hundreds of billions of dollars in premium across different business lines like every year. And in some instances, their share of the market is actually growing and increasing. So the value proposition here for the economy as a whole is quite significant. And we believe that, given our unique position of being part of Hippo and having access both to insurance know-hows as well as to technology and customer-centric culture, I think that we are very uniquely and well positioned to bring to market this innovation that benefits the independent agent side of the business.
And just to complete the picture, the lines of business that they can access, does it just mirror what Hippo do themselves, or there are more lines of business that agents can access?
Yeah, that's a great question. And the answer is definitely the latter. So yeah, obviously they access Hippo and some other home carriers and personal line, which is fine. Some of them, by the way, are Hippo competitors, which is fine because we believe that we should, again, meet our customers where they are. In this case, the agents, and agents need optionality, and agent optionality means that it's not only Hippo, but it actually goes way deeper than that. We offer them also auto carriers for car insurance. We offer life insurance, and most interestingly, I would say, we also offer commercial lines appointments with some of the country's leading commercial carriers. We just announced a few months ago, I think it was the end of last year, that we went live with by Berkshire Hathaway, which is an amazing brand that brings to life both great agent and customer experience with competitive pricing and also using technology and all of that, still using the strength of the Berkshire Hathaway family of companies. Great hit with our with our agents, as you can imagine. We also work with other insurtechs, part of the family, for this kind of solution, and we've seen quite a lot of success with commercial lines, especially nowadays where more and more agents are trying to diversify their book of business, not to rely only on personal lines, which has become very, very tough. So they're actually moving into commercial lines, small commercials. And we are, again, we want to be where our customers are. So we actually improved and built a pretty meaningful selection of commercial lines offering to our agents, which has been growing in a great pace.
I wanted to dive into a little bit about those relationships, because you've been at the forefront of innovation in other industries. You've come into InsurTech, been the forefront of that innovation. But I think what's interesting about this role is the success of it is a collaborative success. It has to be a market dynamic success. Agents need to do well, carriers need to do well.
Yeah.
You're not running a not-for-profit, so you need to do well. What's been your experience of kind of that sort of collaborative innovation across the insurance industry? Anything surprised you? Any kind of challenges or burdens that you didn't foresee?
So I think I fully agree with you. I think one thing that I'm still sometimes surprised, and again, I don't want to generalize too much, but I'll go a little bit on that direction, is that in many cases, the ability to collaborate when you're talking about technology stems from the presence of APIs. And in some cases, it's been, I think there is still way to go in the industry to improve APIs availability, accuracy, and so on. But on the, on a positive note, even today is so different from when we started like 7 years ago, so something like that. Like it's much more, I wouldn't say it's easy, but it's easier than it used to be to build ecosystem and APIs and so on. And yeah, I think you're right. There is no doubt that in order to build a business, it needs to be a collaborative effort, because look at the requirements here. I mean, you have agents, and agents usually want to sell and to service their customers with a solution that fits their needs and to build loyalty and so on. At the same time, carriers, usually they want to sell, but in some cases, especially in today's market, they care even more about profitability and about growing a meaningfully profitable business, and not one that they would need to remove or to price differently in a few months or a few years, right? It's not a good business model. And in many cases, when we go live with a new carrier partner, one of the first questions we ask them in the early days of the partnership, after we have a little bit of data, is what is the loss ratio? How is it going? And the reason we ask that is because, yeah, it doesn't go straight into our bottom line, obviously. I mean, it's not a monetary metric, but we care a lot about it because this is the only way to move forward. So what we do, and again, the role of technology plays a big part of it, is to make sure that we are able to vet and validate our agents, to make sure that they are properly licensed, that they have the right kind of experience, to be a good fit to the carrier's appetite. So basically what we allow to do, again, by using technology, is for agents to select the carriers that are a good fit for them, but also the other way around, to allow insurance carriers and MGA to vet and to surgically locate and find the agents that are a good fit for their appetite. And that's something that has led to phenomenal business results in terms of both growth and profitability. And I think it's, again, it's a testimony for what difference technology makes. Because in some instances, and the expectation in the industry is that, hey, if you work with like a platform for agents, all agents, we get access to all carriers right away. But no, the world is more nuanced than that. And again, because of the customer-centric mindset that we have and the usage of technology, we were able to build a suite of solutions that allows us to tackle exactly that in a way that leads to a profitable, growing business for our partners, which is like super, super important. And at the end of the day, if the agents are happy and if the carriers are happy, then we are going to be happy.
Yeah, that's customer-centric thinking right there. But no, that's really interesting. I think that collaborative nature of these kind of market dynamic models is so interesting because it's an enablement platform as well. As you say, there's barriers to entry being an agent which aren't always anticipated, and I also think there's barriers to kind of people having a good work-life balance. Whereas giving them that tools that allows them to access good carriers and how to access them digitally and in an efficient way, it makes it you're encouraging a more diverse agent pool. And there's more longevity in someone's career if you're essentially making it slightly kind of easier. I've just written a pitch for you there, but that's fine.
No, I fully agree. I don't want to spill the beans on stuff that we have planned for the remainder of the year and so on, but we have quite exciting, and I would even dare to say aggressive plans about how to benefit agents' experience further and to use technology in more and in increasingly interesting and innovative ways to benefit their efficiency, work-life balance, and so on. So yeah, we stay tuned. We have a lot in the works right now.
I just kind of wanted to probably finish on this question because you've early starter to Hippo, gone on the journey, chief product officer, senior role. I won't say easy role because you're an aggressively growing company, an ambitious company. So, but why take on this new challenge for you personally? And how does it feel first connect? Does it feel like a startup? Does it have that kind of startup dynamic to it? Does it matter?
There is a lot to unpack here. So I've been with Hippo as the product person for about 6 years, which is a long time, and it's been a great ride. But at a certain point, I was also looking for some different ways to grow my career and to do exciting stuff over again. And this opportunity with First Connect, when I identified the product market fit and the trajectory that the company was already at, was very, very appealing, because I believe that, and so far it has been proven right, that there is a lot of value to be created if I would be able to bring my experience at Hippo in the early days of building a customer-centric solution, but to bring it into the independent agents world. Just to give you an example, I had like an epiphany moment in the early days of Hippo when Rick, who is now our CEO, and I were building the agent channel for Hippo. I still remember I had like this conversation with one of the agents that was using like a very early version of our quoting and buying funnel that we built for agents. And he basically told us that, hey, in the time it takes me to buy, to quote and to bind one big, never mind the name, but one big company policy, I can do like 4 Hippo policies because the experience is so much better. And it just demonstrated to me what value you could create by taking this design thinking, customer-centric thinking, and bring it not only to the consumer, but also to agents. And that's something that I was really passionate about building at, and still am passionate about building at First Connect. So, the timing is pretty much about that. And I would say that, sometimes the stars need to align in a certain way. And I think in this case, it was a combination of, me kind of finishing off like 6 exciting years at the Hippo product role. At the same time, First Connect kind of picking up. So I think it was kind of a nice alignment of the stars that, that was also very nicely overlapping with my passion about building business almost from scratch and having like customer-centric thinking. I would say that in addition to that, there are some other aspects, when you look at the market as a whole, there are some other interesting dynamics that are at play that made me even more excited about this opportunity. So first of all, we see more and more agents going direct into this world, because in many cases, being captive is very limiting. I mean, just a few days ago, we all saw the news about State Farm, which is the country's biggest insurance company, essentially stopping writing new business for home and commercial in California, which is a huge market, obviously.
Yeah, of course.
So think about yourself as a captive agent that all of a sudden you can't do it anymore. Like, so many agents are actually moving into the independent route in order to provide livelihood and to make a living. And this is kind of a tailwind that is very supportive of our business model, because we are a very easy to use platform that they can onboard themselves like, in a few minutes and essentially start selling very, very quickly. Again, using technology and design, we just make it simpler than the rest of the pack. And second, you see more and more carriers putting more emphasis on selling through independent agents, but again, in a surgical, nuanced way in order to make sure that their business is profitable. And again, we are positioned in the right way to do that. So I think those are kind of tailwinds that are also supporting our effort. You also asked about, first connected to a startup, and I would say that the answer is definitely yes. We are part of Hippo, so we get access to Hippo's technology and resources, which is great. But at the same time, the team is deliberately, the First Connect team is deliberately rather small and lean. We are moving extremely fast, launching like new product features and capabilities almost every week, in some instances every week. Launching like new carrier partners every other week or so. So we are taking a lot of pride in our ability to move fast, talking to customers a lot, which is something that I'm very, very passionate about. Just came back from an agency tour a couple of weeks ago, meeting a few of our agencies. Like, it's a super important thing for us. So yeah, we try to essentially benefit from the best of both worlds. Like, we are part of a large organization that has resources and presence in the market, but at the same time, we are also moving very, very fast independently in order to grow our business.
It's really interesting, because I was talking to someone earlier today about an insurtech founder, and I was saying from our perspective, we've seen a lot more in the corporate venture space, CVC space, and they've been more active. We've been more engaged with them from a talent perspective, and they've been building out their teams, and we've been involved in some of that, particularly in the UK. And then the sort of evolution of this is almost it's a corporate venture play within the Hippo, so sort of insurtech, mega insurtech, now kind of going into this world of kind of building out these new streams. So it's a really interesting evolution. I think Hippo continues to be a really interesting business. I'm really excited what you're going to do with First Connect. And I think putting someone who's got that product first mindset, customer centric mindset, is a really interesting kind of use of your skill set. So Aviad, I wish you all the success with it. Thank you so much for taking the time out of your schedule to kind of, because you are a very busy man, I'm aware. So thank you so much for spending some time with us. And yeah, I hope we get to connect face to face again soon. Are you at any of the conferences this year? Are we going to see you?
Yeah, actually, I'm in InsurTech Insights next week in New York again. So if you're around, would love to say hi.
Oh, you know me, Aviad. You can't get me out of a conference. I'm always there, so I'll definitely be there.
Fantastic.
Thanks for your time. Really appreciate it.
Thanks, Alex. Thanks for having me. Bye-bye.